Welcome back, folks. In this video, I'm going to walk you through a very high probability setup, and I'm going to use the NASDAQ daily chart here to walk you through how to identify this setup. It also helps with identifying the daily bias. Then I'm also going to show you how you can use a lower time frame and apply what you've learned in this video on any market. And I'm going to use gold as an example because that's the market that I typically trade. Okay, so on this daily NASDAQ chart, you can see we have a low here, and then we also have a low that's slightly higher over here. Okay, now Michael refers to those 2 points as relative equal lows because this low is slightly higher than this low on the left-hand side. So let's just put a line there so we can have that reference point on the chart. Now, I look for reversals. So when I want to long the market, I only want to do it after a daily low has been swept or a weekly low has been swept. And if I'm looking for shorts, then I know from experience the best shorts are kind of going to appear from daily highs or weekly highs. Okay, so now it's very important for me the day that this sweep of these equal lows occurs and how the market closes after the low has been swept. Okay, so this particular day where the market has come down and swept these relative equal lows is Wednesday, and the close on Wednesday after taking out that liquidity pool is bullish. Now that's important, so make sure you write that down, right? The low has been swept on a Wednesday and it has closed bullish, and very important, it has closed back inside the range. What I mean by back inside the range is that it's come down and the close is back inside both of these lows. Okay? Now that day there is Tuesday. This is Wednesday. Once I see that, I'm expecting Thursday to be bullish, right? And so Thursday is therefore this Wednesday becomes the manipulation. Okay? Tuesday is basically the accumulation. And then Thursday becomes the distribution. That's what I'm anticipating after seeing this Wednesday close inside the range after taking out a high probability, high time frame liquidity pool. Now, my target on Thursday is going to be back above the down day on Tuesday. So the high of Tuesday should be marked out. Now, all this does is it sets for me the bias for Thursday. Now, I only trade the New York session at a very specific time. I want to see my long entry setup now that my bias is bullish on Thursday inside the New York session between 9:30 and 10 a.m. or I'll stretch it to 10:15 a.m. And my preference is for the setup to appear between 9:45 a.m. and 10:15 a.m. So I will only come to the market at that very specific time and look for my setup. Now my bias is to look for a long, right? Because of what I see here. So now that I have a bias, I can wait for that setup, which is my long setup, to appear inside of Thursday at that specific time. So I'm going to now drop down to the 15-minute time frame and look at Thursday New York session. Okay. Now my bias is already to the upside. I've got a target that I've already gone through how I've established. I've already walked you through why I'm biased to the long side based on what I've seen on Tuesday and Wednesday. Okay, and now all I'm looking for is my long setup between 9:30 and 10:15 a.m. New York time. Okay, in the New York session, preferably at 9:45 a.m. up to 10:15 a.m. Now all I'm looking for is a bullish ICT signature to get in line with my direction. So we can see here that there's a bullish fair value gap. Okay, now we can see here this is 9:30, right? Now my entry time is between 9:30 a.m. New York time and 10:15 a.m. New York time. My preference is for the setup to be within 9:45 a.m. and 10:15 a.m. Okay, now at this point in time, if I draw a line at this low, which is basically the high end of this bullish fair value gap, we really haven't gone in, right, side of that bullish fair value gap. In fact, the market then at 9:30 open, which is the New York Stock Exchange open, goes up. Okay, and this, when I see this, right, it could mean that I've missed out on the long if it had gone up to the target, because that's my target. That's Tuesday's high. Okay, now the time here is 9:45 a.m. and this is now the high of the week. So there would have been a short setup because 9:45 a.m. is the time that I like to look for setups. Now I am biased to the long, so I would not have taken this short, although there would have been a nice short back inside to the bullish fair value gap. Now here, this is 10:15 a.m. Okay, remember my setup time window is anywhere from 9:30 a.m. onwards up to 10:15 a.m. Okay, my preference is 9:45 a.m. to 10:15 a.m. So this is this candle here comes into the bullish fair value gap. Notice that this body is up above, remaining within this bullish fair value gap. Okay, so this is a long. It's also coming into this bullish order block, and my target would be up to the high that I've marked. Okay, this is a high probability long entry setup. Okay, into this bullish order block at the right time on a day that I have established the bias to be bullish, right? These down candles are coming into this down candle, right? That's why that's an order block. These are all connected, right? This down candle is coming to these 3 down candles. This is where this move has begun. And you could be long in London, right? And adding and continuing in New York from this level. But I have a very specific time window that I like to trade, and that is between 9:30 onwards. Okay, my preference is 9:45 a.m. to 10:15 a.m. And this is that time window where that setup presents in line with my bias into the bullish fair value gap, into the order block, right? And straight up to the projected target. Okay, you got to go back and you got to study these charts. Don't take my word for it. Go and identify where you can see this type of a setup, where you have a sweep of equal lows, a bar like this that is an immediate rejection, right? That's trapping traders down low and shifting. I call that the trap and shift, where you have a bullish close back inside the range after sweeping key liquidity pools, right? Where you have a down candle and that is preceding this sweep, and you can target the high of that down candle on the next day, right? And then I like to trade the New York session at a very specific time, and that's the only time I look for setups, right? Go back and you study the charts. Now, I apply these same concepts on other markets like gold, okay? So if I look at gold and I look at the higher time frame, 4-hourly time frame, right? I have the same exact setup here on gold, where the market's coming down, sweeping a key liquidity pool, and more importantly, coming into a bullish signature. This is bullish fair value gap, immediately rejecting, closing bullish inside the range, and I can see 2 levels here that we can say are relative equal highs. All 3, right? All this is relative equal highs because each high is lower, right? And we can use that as the target on the way up, okay? And this is the afternoon session, 2 p.m. 4-hourly candle on gold. The exact same setup. Again, don't take my word for it. You go and you study the charts. Study the NASDAQ, right? Study the higher time frame and see how many times you see this setup, okay? Where you sweep liquidity, close back inside the range, and then the next day is bullish. Now, I like to go into that day at a very specific time inside of the New York session and look for my bullish signatures, my bullish long setups to trade that back up to the high, right, of where everybody is short from, okay? Your job is to go back and study the charts. Hope the video is useful. I look forward to talking with you in the next video.